Big news in the American consumer health and personal care sector. Kimberly-Clark has announced that it will acquire Kenvue in a massive cash-and-stock transaction valued at about $48.7 billion. Today we'll unpack what this means for the companies, for U.S. consumers, and for the broader market. Let's start with the numbers and the deal's structure. According to multiple sources, Kimberly-Clark will pay roughly $21.01 per share for Kenvue. The total deal value, about $48.7 billion in enterprise value. The consideration: Kenvue shareholders receive $3.50 in cash plus 0.14625 Kimberly-Clark shares for each Kenvue share. Post-closing ownership: Kimberly-Clark shareholders will own 54% of the combined company, Kenvue shareholders 46%. Expected closing: second half of 2026, subject to regulatory approvals and shareholder votes. In short, a major transaction creating one of the largest US-based consumer health and wellness companies. To understand the deal's significance, let's look at what each company brings to the table. Kimberly-Clark, headquartered in Irving, Texas, known for household brands such as Kleenex, tissues, Huggies, diapers, Cottonelle, and Rex, strong in hygiene and personal care categories in the US and globally. Kenvue, a formerly independent consumer health company spun off from Johnson & Johnson, owning brands like Tylenol, Band-Aid, Neutrogena, Listerine. So this is a mashup: Kimberly-Clark's hygiene plus Kenvue's health/OTC offerings. The combined company is projected to generate about $32 billion in annual revenue. That scale matters for US consumers, investors, and the industry. Why this deal, and why this timing, particularly for a US audience? Growth trends. American consumers are increasingly focused on health, wellness, preventive care. Combining hygiene and OTC health positions the new entity well. Scale and cost synergies. The press release estimates run rate synergies of about $2.1 billion. For Kenvue, as a standalone business, it faced headwinds: competition, structural challenges, independent brand leadership. The acquisition offers an exit strategy and access to Kimberly-Clark's infrastructure. For Kimberly-Clark, diversifies and reinforces its product portfolio with higher-margin health/OTC brands, reduces reliance solely on hygiene. For U.S. investors and markets, this is a bet on everyday care across life stages. Now, the other side of the coin: even big deals carry risk, especially here in the U.S. Regulatory scrutiny. A deal of this size in consumer health/personal care will face antitrust and regulatory reviews in the U.S. and other jurisdictions. Integration risk. Combining two large firms with overlapping categories, different cultures, logistics, and systems is complex. Execution will determine success. Brand and liability risk. Kenvue has faced reputational/legal challenges, e.g. product liability claims, which could carry over into the combined company. Market reaction. After the announcement, Kenvue's stock jumped 18-22%, while Kimberly-Clark's dropped 12-18%, signaling investor concerns about dilution or integration risks. For U.S. consumers, there's also the question: will this consolidation reduce competition or innovation? What does this mean for you as an American consumer, and what might shift in the U.S. industry? For consumers, you may see a broader product range from one company, potentially faster innovations and stronger branding. On the flip side, fewer companies in the mix could mean less competition. Retailers and distribution. They will deal with a mega company combining multiple major brands. Bargaining power may shift. Industry impact. Smaller U.S. consumer health players may find it harder to compete. This could accelerate consolidation. U.S. global positioning. While U.S.-based, this company will have global reach, meaning products and strategies developed in the U.S. could define worldwide consumer health trends. So while the product under your bathroom sink may remain the same, the company behind it just got a lot bigger. In the months ahead, especially from a U.S. vantage point, key items to monitor. Regulatory approval. Will the U.S. Federal Trade Commission, FTC, raise objections or require divestitures? Integration execution. How smoothly do the companies combine their systems, brands, leadership? Financials. Will the deal prove accretive to U.S. shareholders, grow EPS as promised? Consumer impact. Will product quality, innovation, and competition in the U.S. remain strong? Stock market reaction. Will U.S. investors reward the combined entity or remain wary of execution risk? Conclusion. This acquisition marks one of the largest moves in the U.S. consumer health/personal care sector. If executed well, it could create a powerhouse company spanning hygiene, healthcare products, and everyday essentials, made and marketed in the U.S., serving billions of consumers. But with size comes complexity, and especially from a U.S. perspective, oversight, execution, and consumer value will define whether this deal truly pays off. Thanks for watching. If you found this useful, drop a comment. Which brand from Kimberly-Clark or Kenvue do you use daily? And what changes do you expect now? Don't forget to like and subscribe for more deep dives into major U.S. business moves.